Boom shakalaka. Despite this bearish Bitcoin head and shoulders, many charts are suggesting the bottom is already in. In today's video, we're going to be talking about why the reversal might be closer than we think. Stay tuned. What's up, everyone? Randall here from Crypto Love. Today's video, we're talking about this bearish Bitcoin head and shoulders, a bunch of charts suggesting the bottom is already in, and why the reversal may be a lot closer than anyone is expecting. Before we get into it, guys, make sure to like, subscribe, click the notification bell. Come join us over on Twitter at Crypto Love. Push the like button, and let's get started today. Extreme Fear 23 up from yesterday 21, as the overall markets are up about 3% today. Bitcoin at 19,358, Ethereum at 1357, BNB at 269, XRP 37 cents, Cardano 44 cents, Solana $32, and Dogecoin 5 cents. And as we take a look at the Bitcoin charts, Bitcoin bounced right around the area of this green line, the 280 weekly moving average, which historically has been the lowest support Bitcoin has ever had. And we bounce back up there to roughly close to the $20,000 area. Now, there is a head and shoulders here. Generally, head and shoulders is a bearish pattern. Could potentially put the price all the way down to the $13,500 area. But if we take a look, there's a lot of evidence suggesting that the bottom might already be in. If we take a look at the macro, the upcoming months might change things for Bitcoin, but currently there's no evidence in the data of that just yet. Every time historically the short-term holder and long-term holder cost basis has crossed, the bottom has already been in for Bitcoin. And guess what? We're just a few days away from the next cross happening. As a matter of fact, Plan C takes a look at a whole bunch of different bottoming crosses. All of these crosses have predicted the bottoms historically. 3 out of 4 have already happened. The only one that hasn't, the cost basis cross, which is the long-term versus short-term holder. So if we take a look at the delta cross, which is the delta price versus coin value days destroyed, the crosses were in the bottom previously. We had a cross on June 10th. If we take a look at the deep value cross, which compares the 135 and the 730-day SMAs, well, those were the bottoms previously. That cross was June 18th. If we take a look at the pi cycle bottom cross, which takes a look at these moving averages, both of these occurred at bottoms, and guess what? It happened on July 13th. That's 3 crosses already happening previously. The only one that hasn't is the one we were just taking a look at from the rational root, the short-term holder and long-term holder cost basis. This one is projected to cross in about a week's time or less. And not only that, if we take a look at the 9-year Bitcoin weekly OBV channel, historically, over 9 years, this has predicted the tops and the bottoms. And guess what? We're in the bottom area. Significant if it holds, significant if it breaks. Right now, it is holding for the moment, another bottoming signal. And we also have to take a look at the larger markets, because Bitcoin and cryptocurrency are no longer just by themselves. We're in the whole recession, pandemic, war, bear markets, quantitative tightening, all these different things going on, and they all impact cryptocurrencies as well as other markets. But if we take a look, the anticipation around the most anticipated recession keeps growing. I know, this thing is ridiculous. We've been anticipating this recession since at least 2008. Well, when this metric rolls over, the past has shown to be already in for the S&P 500. And as you can see here, it's growing potentially. The slope is changing a bit, might be rolling over pretty quickly. As you can see, it rolls over pretty darn fast. But both times previously, this was in March of 09, the bottom was already in. April of 2020, the bottom was already in. Once this rolls over, could suggest that the most anticipated recession is already over. As a matter of fact, if we take a look right now, this is crazy. Massive downside anticipation is present in the markets. The put to call premium has spiked off the charts. Now, historically, this has happened at market bottoms. Okay, it's not something that happens before the bottom, it's something that happens at the bottoms. So this suggesting that it is likely that we are at a bottom as opposed to just before a bottom. As a matter of fact, this indicator has been right 100% hit rate in terms of corrections. The ISM prices paid index has fallen off a cliff. It's declined by over 34% in 5 months, the 5th largest contraction in history since 1949. Okay, that's 70 plus years. The S&P 500 was over 10% higher the following 12 months with 100% accuracy following this. Every time this happened, 100% accuracy, it was up 10% in the next year. So the likelihood of this going down, the likelihood of everybody betting that the market's going down and it actually going down, it's not that likely. Right now, if we take a look at Bitcoin, there's a liquidity update here. Currently, there's more liquidity to get through between 18 to 16,000 down here than there is above $25,000. So this might form a little bit of a base for us down here before we blast through this wall at $25,000. There's just not as much action above where we are. And right now, you have to look at these divergences because divergences always preempt Bitcoin price. They show us what's going to happen before it happens. At the top, we had bearish divergences. At the bottom, we have bullish divergences, and these tell us what's going to happen before it actually impacts the price. So on the 12-hour chart, Bitcoin's formed lower lows while the RSI has formed higher lows. You can see lower lows, higher lows. This is called an RSI bullish divergence. It indicates the weakening of downtrend momentum. The control of price may be shifting from sellers to buyers. So this tells us the strength of the markets. Even though the price is going down, eventually the price will catch up and it'll start going back up. As a matter of fact, right now, we are finding support on two very important levels, the 78.6 fib and also the SMMA 200, as well as already having a bottom in the weekly RSI. All of these things suggesting that the price is likely to head back up from here. So that brings us to this last chart here. The reversal might be a lot closer than everyone thinks. So if we take a look at the Pi cycle bottom and reversal, this chart from Titan of Crypto, according to the Pi cycle bottom indicator, the bottom is in when the 150 EMA crosses the 471 MA. The reversal is in when the 150 EMA crosses the 471 MA. So the first cross already occurred. We all know that Pi cycle bottom cross. That occurred in July, almost identical to when we had the $17,000 price bottom. The second cross is yet to occur, but it's on its way. So if we take a look previously, when we had the cross, the green going below the red, the bottom was in. And then when the green crosses above the red, that's actually the reversal signal. And you can see from there, that's when the parabolic rally begins. Same thing happened here in 2019. When the green goes below the red, we had the bottom. And then when the green goes above the red, that's when the parabolic run begins. So this cycle here, we've already had the green going below the red, suggesting the bottom is already in. And guess what? If we just draw these lines out, we are not too far, potentially Q1 of next year. We could be seeing the green crossing above the red, suggesting the bottom is already in, and we are in for the parabolic rally before anyone expects it. So that's all for today's video. If you did enjoy it, just push the like button. It helps out so much. I'll catch you guys later. Love you. Have a good one. Peace.
If you don't think Bitcoin's going to $1 million a coin and then $10 million a coin, you're already a loser.